What's up, guys? It's Cody here again. I wanted to go over another recap. It shows today's Saturday, 1:26 a.m. But I'm talking about Friday, December 13th, Friday the 13th, and I'm gonna do a recap of that. I just did a recap of the 12th. I don't really have a my trading platform's not working right now, my Thinkorswim, so I just went on TradingView just to show you guys basically a line chart and you know, Alibaba, that was one of my picks from yesterday, and it really didn't go up very much. Even with the trade war news, I would have actually expected it to go up more. In the pre-market, it actually gapped above 207 or maybe even 208, and I said, you know, a break over 206, so a break and hold, and it didn't really hold. Like, that's the only concerning part about this trade, is the fact that it didn't really hold the way I thought it would. You know, I mean, there's certain trickeries that the market does, you know, that makes it, you know, to where you don't really, like, they make you kind of want to not hold things certain days, and that could be it, but I don't know, just the way that it acted made me kind of change my view on this a little bit. I'm still pretty bullish on it. You know, but it kind of makes me think that it's a little more vulnerable for a pullback than I thought it was. But yeah, so basically, like, this is how it did today. It rallied a lot. You know, it went up to 207 in the actual day market, but in the pre-market, it was up above 208, and I didn't really like the way that it's retested several times, and it's pretty weak, you know, throughout the day. That's kind of like a concern to me. It makes me feel different about the trade. You know, some days are set up to make things look weaker than they are, and you know, and so forth. But at the same time, like, I don't know, I don't really like the way this one's acting. I'd still keep a position on, but you know, I'd probably even cut it. This is actually one, like, I'm not saying, like, you know, I've just been in all these good ones, but it's one that I've been in for quite some time. I've made some good money on this trade. I've been in it, you know, throughout the last week, you know, throughout the rally and stuff. I got long at probably like 193 or so, and so I have been making some profits on it. You know, if you had a bigger position on, I'd probably like cut it in half or so. Another one I talked about, which I talked about being my favorite, was PayPal. And this one had a really nice day today. Went up, you know, $2, 1.9%, and it was up above like 2% at the high of the day. You know, basically closed near the high of the day. Kind of went up pretty good, and you know, the calls, the way I structured my trade, which I talked about in the last video, you know, it paid off really well today. And you can do a lot of things with that. You can roll it up, you can spread it off, you know, because I had a straight legged call. You could, you know, maybe buy some put spreads to kind of hedge a little. I mean, there's several variations that you guys can do with this trade. But this trade paid off very nicely for me. Like I said, it was one of my higher conviction ones from the last video, and I still like it here, even at 107.6. I think it's gonna make its way towards 111, and it's kind of like the next stop. You know, maybe 111, 112, and I think that's gonna be good. Qualcomm, which is one I said was vulnerable for a pullback. I believe this one ended the day down, but oh yeah, okay. So we ended up the day down 1.3%. I was saying that it'd be a really nice buy. You know, I mean, it would be a good buy to where it was at. You know, as far as a call spread, but at 87.8. You know, for a single leg spread, you know, like a straight call, like I'd probably wait for a pullback towards the 85 level. Maybe 85 and a half or so. Like I said, I don't really have my main chart on me, and like this time I was going to prepare myself a little bit for the levels, but I kind of forgot because, or not forgot, but I kind of couldn't do that because I wasn't able to get on my regular platform. So yeah, like 85 and a half or so would be a good spot to get long. Another one I talked about was Home Depot. I talked about this one being as a pullback towards, and even though today it ended up $2, up 1%. Um, this is one that I said I'd only really touch long if it got dropped down to like 208 or so, maybe a little higher, 208 and a half. Like I'd probably look at this one for a long. Today was pretty impressive, the strength, but I'm not like super surprised by it. So yeah, I'd wait for like 208 on that. But some new ones that I have been looking at, and I do have like a big dental appointment. Like I gotta get a lot of stuff done, so I'm not gonna be in for Monday. But one that I was thinking of putting on today is kind of a decent amount of risk the way I trade, so I didn't want to put on too much. I did put on a couple little call spreads on this, but I mean nothing as far as like a normal size position for me. But basically, we had the breakout here on Adobe. That's ticker symbol, ADBE. It's basically the software company that does Illustrator and Publisher and shit like that. And we broke out to new highs. And a lot of people, like, sometimes when things hit new highs, kind of like this did right here, they kind of look for a fade. We might fade a little bit. I don't really think so. I would think more likely either flag or break higher. I think this could have a pretty fast run towards 330, maybe even 335. Right now we're at 318. I actually like this one a lot right here. I'd like it even more on like a pullback towards maybe 312 or so. Like I said, I don't really have all of my levels, and that's a bad thing. But this time it was because of the delay. Next time I'll have more, not accurate, but more of levels that I actually think, without me kind of just like judging it based on the chart and so forth. But yeah, so Adobe is one that I'm looking at on the long side. You can play it through call spreads, you can do call butterflies, you can do lots of different things. Basically, I would just structure the trade in a way to where you expect a faster gain. Like I don't really have a lot of these things planned for those of you that just trade the stock, because obviously when you trade the equity, you have to have a certain stop limit in mind. You always have to have a stop if you're trading. If you're investing, then it's a little different. You use cost average and things like that. But when you're trading, you always have to have a risk reward standpoint. You're always trying to risk one to hopefully make three. I know that's not always the easiest thing, but if you make a 1 to 2 ratio, that's always good as well, as long as you're right more than 50% of the time. And obviously that's what trading's all about. It's trying to be right at least 60% of the time, or something like that. Obviously traders don't have the biggest runs ever, but um, but yeah, I like this one. I like how it's breaking out assertively over the high, and I think it could continue. And so there's Adobe, and then here's another one that I like. You still have to kind of play like probably January's on this, but AbbVie, it was a hated name for a long time, and it had this big rally, big sharp rally. Yeah, it's kind of flagging right now. If you, oh, I don't even know if I want to try to draw shit on this chart, but I guess I'm gonna try. But uh, I don't know where, but I mean, basically you can see it. If you basically a flag is anything that has asserted itself up in a long way and really hasn't given much back in strength. That's always a good sign. Like this, try to give some back and it popped up. Try to give some more back and you kind of had a little double bottom and it kind of popped up, and then we had this spike. So, if you were to, draw, I mean, I wish I could, oh gosh, I wish I could, show you guys, shit, I don't even know what I did, but, I don't, oh, never mind, right here. So, basically, if I drew out, like a little, it's kind of like this. It's kind of like or I mean, I know a lot of you guys probably already know this type of stuff, and you guys can spot this type of stuff, but this is mainly for maybe the little more beginners. But basically, this is kind of like the idealism of a flag. It's basically like a long stretch of breakout, and then we kind of consolidate into a flag, and basically it's like a big break without giving a whole lot back, because obviously when you expect to run this big, you would expect the trend to get pretty tired and maybe drop down at least halfway or maybe a little more, but this trend tended to break, hold, that type of pattern, break higher again. So I think that this pattern is going to eventually, break out to the upside. Um, just basically just like out like that, and we might back and fill a little more, something like that. But I like January strikes for this one. Premium's not super high. You don't really have to spread it, but at the same time, like there's certain ways, depending on how you want to do it. Like I don't want to go too much into it, but there's certain ways where you can strategize, your options where it makes the most sense risk reward wise. But basically, yeah, AbbVie and Adobe are two names I'm looking at. I'm also looking at Hasbro. Hasbro is a toy maker, and basically, what is the word? One, I don't. Oh, okay, never mind. We're over here. Um, so basically, we had this huge gap down. We could refill this gap right here, and I think we're ultimately going to. I do kind of think we're either going to have a little tension here or break lower towards like 101 or so. At 101, I'd be looking to get long for sure. I'm mainly waiting for this one on a pullback towards that level, towards 101. Might get in at 102 depending on the price action, but if it broke down to 101, I'd really like this one long, and I'd take it for a long. Basically to break out over this high, this most recent high, and then over this week of the candle, and this is an open gap to fill. If you guys don't know, technicians love gaps, because gaps, when it fills down this easily, it can fill up as easily, and so forth. So gaps are always a good thing to look for. Kind of like this gap right here, how we, pretty aggressively ripped right through the gap. Even right here, we had a gap, and we broke down it through just a few days of candles. And yeah, so that's kind of why I like this. Is a big open range, for some upside, maybe towards 110 or so. Like I said, I don't really have my levels out, and I will next for the next video. But for now, for the first video and this video, I'm just kind of winging it and stuff. Maybe I'll start taking a little more notes and stuff. I don't really know, but yeah. So look at Adobe, which is my favorite, AbbVie, which is my second favorite, and Hasbro, which is one I'd really only like on a pullback towards 102 to 101. But those are ones I'm looking at. Like I said, the BABA wasn't so impressive today for the catalysts and the trends and stuff. But one day doesn't always make a trend. And PayPal worked out very well, paid me very nice profits. So I doubt any of you guys did, because my video didn't get like a whole lot of views. But still, like it's one of those things. If one of you guys profited on it, then that's pretty cool, because it was a big gainer for sure. And Home Depot, like I said, I more expected a pullback. And Qualcomm, I was talking about it being vulnerable for a pullback and to only do spreads and, use the pullback to take off the short-legged spread. Like I said, if this is confusing, if you didn't watch the last video, I'm talking about options. And options are basically, I don't know, they're levered, they're derivatives of a stock, but they're levered in a way to where you can use the leverage in your advantage in a smart way, or you can use it as a dumb way. It's kind of the way you strategize it, but yeah, I mean, I would always encourage people to look into options. Even if you're into stock trading, you could always try to, like I've always said, you always want to suit your own kind of game. Have your own spots to pick and your own levels. When you understand deviations and different levels and things like that, you'll understand like where to pick your spots, and that's the part that I'm not gonna explain. But at the same time, I want you guys to figure that on your own. My job is mainly just to establish, or not establish like I'm establishing it, but just talk about the trend, what I think it's going to do. Not all my things are right, but a lot of my things are, and so if you guys follow along, you guys can kind of trade in and out of the trend that I'm referencing, or if I like Hasbro, if I say 101 and 102, you can risk off 99, and things like that. Just depending on your risk reward, you never want to skew that. You always want to make sure your risk reward is pretty good, and obviously you could have some contracts or some shares that you can scalp around, but you want to make sure your core position is always paying you at least 1 to 1, but more than likely 1 to 2. So if you risk if you risk $1, you can make $3. That type of scenario. So that's kind of what you want to look for, and yeah. So that's the update. Like I'll have more trades. I do have a lot of things that I'm really looking at, but I'll get more into it. Maybe if I make more content. I've done this 2 days in a row so far, and so far so good and stuff. And like I said, let me know what you guys think in the comment section. I don't care if you like it or anything. I'm not like that person that says like and subscribe and all that shit. If you want to do it, then go ahead and do it. I don't really know exactly where I'm going with this. Like, it's just kind of something I'm doing kind of on the side. Like, I kind of wing this whole thing. I don't prepare for it. So that's probably why I sound so, like, I don't know. Some people have their videos all set out a lot better than me. But at the same time, that's kind of how it is right now. And if you guys appreciate it, let me know. And yeah, thank you guys so much for listening, especially if you made it this far. And thanks, guys.